On Friday, the VIX predicted a bounce on the S&P 500. We got it today. The VIX was correct. It was up over 10% on Friday, predicting a bounce on the S&P 500. We had a sell-off initially most of the day. It escalated with Powell, but then we recovered by the end of the session. Market threw a little fit at the pace of the rate cuts. People may get what they want, though, even though Powell is saying 25 basis point cuts for the rest of the year, 2 of them. They're seeing signs of weakness with recession on the horizon. The market may get what it wants, but be careful what you wish for because, again, then the market will begin to price in recession, which is about to happen. Bouncing off the 200, again, it still may be that we see the VIX come to the lower band or below the 200 period here in an overall bottoming process. 50 green line remains above the black line, the 200 period moving average, warning that this rally will eventually be terminated once we get back above the 50 period moving average and stay there on the VIX. Again, this divergence on the MACD may still be under construction. We still may drop sharply below this low over here and hit the lower band and drop below the 200 period. That's still possible. But again, I think that you got a good shot based on the historic data of the last 2 bear markets. You've got a good shot that we could see a peak S&P 500 in the next 2 weeks, this week or next week, talking about at great length and detail. This is we're not done yet because NASDAQ hasn't filled the gap at 20,400. I think we're going to see that happen, and we could see it happen before the week ends. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, indicators, let me know that by supporting the channel. If you could take a moment to do that, I would really, really appreciate it. I don't have any sponsors. I turned all those offers down. Made on YouTube is largely through sponsors. Ad revenue doesn't pay very much. I don't want to have sponsors. I don't want to sell you a bunch of junk you don't need. Ask that you partner with me and support the channel. Take the time to do that. I would really, really appreciate it. I thank you for that. S&P bouncing up the 10 period. Again, momentum is still bullish. Great Scott, did you hear what I said? My signals are bullish. I told you back over here. I expected that on Friday, with the jobs report, that my signals were going to turn bullish the next week. We got it with the inflation data, and we got it with the inflation data. Why? Because I'm looking for a new high. I'm not looking for a crash right now. I'm looking for a top. Looking for new highs. We've got it. I don't think we're done yet. Now we're getting some red. Might form a divergence right here. Getting some green bars. Awesome oscillator. But again, once NASDAQ reaches 20,400, it'll probably overthrow it, not move to new high. I'm going to be looking for a top on the S&P 500. I think that'll come either this week or next week. Be looking for the top to complete and a reversal to start. Once a reversal starts, be looking for the bear market to be ushered in. So again, we still have blue bars. We still have the green cloud. My signals remain bullish. You think I'm looking for a crash right now? You're not listening to what I'm saying. I'm looking for a top, then a reversal, then the bear market crash. Have the top first. If we see any green showing up here, and we'll see, do we sell off with the jobs report by the end of the week, or do we rally with it and complete a top? We'll be watching that, and again, watching the revisions for the jobs report and the constant revisions that we continue to get with the fake numbers that we continue to receive with the jobs report. So we'll be watching that. Weekly chart of the S&P. Again, awesome oscillator. We got a green bar this week. We've got the diversions going out with the MACD. You got the diversions, multiple point diversions going on with the awesome oscillator. This is going to lead to a reversal. Probably we'll see a peak this week or next week. Be looking for clues, but once it's done, you're going to probably see a pretty dramatic drop rather quickly back below the 10 and 20, back towards the 50 period moving average. In 2022, we could see a very quick 15% drop, or in 2007, right after we peaked, you got a 20.5% sell-off. We could see something very, a big rapid sell-off happen very quickly. NASDAQ had that red bar, turned right back to green this week. Again, I'm looking for confirmation of a lower high if we fill that gap on the NASDAQ. I did get a red bar today, but again, I think that we'll still see gap fill at the 20,400 area. And then I think we will see the top complete in a reversal. We are trying to bounce off our 10 period moving average. My signals continue to remain bullish. Great Scott. Are you listening to what I'm saying? My signals remain bullish. I expect we're going higher. Then I think we're going to top out. If we continue to get red bars or not, we'll see if we try to go lower first. The selling is now done and we're going to resume the advance. Regardless, I think we're going higher. Hope you hear what I'm saying. We had Powell speak today. There was disappointment. Initially, there was selling before Powell ever spoke, but there was disappointment about the pace of the rate cuts. But then the market recovered. Again, I still believe that the NASDAQ is going to go up and fill that gap and probably see the S&P see new highs, fills that gap. Our current target rate is 475 to 500. Right now, there's a 0.25% or a 54% chance of a quarter of a percent rate cut at the next meeting. The hopes have been, and it was just addicted to low rates and stimulus. There have been hopes for 3/4 the end of the year, another 3/4, or another percent down, 0.5% cuts. All the path for quarter point cuts for 0.5%, another 0.5% by the end of the year, and that was disappointing for the market. It's just out of touch with reality. Saying Powell won't do bigger cuts, so eventually recession's going to show up, and he probably will. Going to lower rates down to nothing again, like he did in 2020. He can't. Inflation will come roaring back. 4% just changed. It was at 63.8. It's constantly changing. Fed fund futures constantly changing. Right now, again, around 64% or so for a quarter point cut. That is in the November meeting. The December meeting, the hope is that there's going to be 47.6% chance anyways that we're going to see it drop from the level here down to another 50 basis point cut. Now a quarter point cut in November, 0.5%. And again, this could change. Constantly changing, but that was the reason for the bigger sell-off during Powell's Q&A and his opening remarks and so forth. The market down as Powell suggesting that there's not going to be an aggressive path to rate cuts. Now, again, that could change. Again, we have a lot of economic data coming before the next Fed meeting. And after the next Fed meeting, again, we're going to start seeing signs of recession show up. If the Fed does get more aggressive with rate cuts and starts picking up the pace, the market's not going to be going, oh, yay, yay. It's going to be going, hey, we're about to have a recession. Let's price that in. Powell suggesting, 2 25 basis point cuts, total of 50 basis point cuts for the balance of the year. That disappointed the markets, but then the markets recovered after Powell's Q&A. Covered off of those lows and rallied back up. Concerns of a slower pace of the rate cuts, a rate cutting campaign to a market that is addicted to stimulus. So that was initially why we got a bigger sell-off during Powell, but then we got a recovery. I still think NASDAQ is going to go fill that gap, and I still believe, and it does, that S&P is probably going to move up to a new high. Had Powell today. Later, we'll get the jobs report on Friday. We'll get the private payrolls earlier in the week, later in the week here. Jobs report could be big. Again, the unemployment rate is predicting, with the SOM rule being triggered, recession is about to start. So Powell disappointing the markets with suggesting smaller rate cuts, a slower pace to the rate cutting campaign, a less aggressive pace for rate cuts. But the markets recovered. But again, we're likely still in a topping process, and again, could see a peak here possibly over the next 2 weeks in the market. Very high probability. See the divergences begin to play out there in the weekly time frame. The market recovered. We had sold off before Powell got more aggressive. The Dow ended up dropping about 400 points, nearly 400 points during Powell's Q&A, and then we saw the recovery. But it ended positive. The Dow ended up 17 points. Pretty much flat. The S&P ended up 0.42%, up 24 points, again after being negative a good chunk of the session there. NASDAQ ended up 0.38%. Russell ended up 0.25%, and the VIX was down 1.36%. So still believe, as I keep saying, NASDAQ's going to go higher. NASDAQ's going to fill the gap at 20,400. Here's the NASDAQ, and again, I believe that we're going to go fill this gap up here, 20,398, rounding up 20,400. And again, right now we come back to the 10 period. A little hard to see my little arrows in the way here, but we're back at the 10 period moving average here and trying to bounce there. We were actually negative much of the session and then got a late day rebound after Powell finished the Q&A and positive. Up at extremes with momentum. May be that we end up seeing it roll over and form a divergence, but it could be that we just remain at extremes for an extended period of time. Something like over here where we just remain at extremes, go up and we fill the gap that I'm looking for. And again, I believe this is going to happen in the next few weeks. I believe that either this week and start to sell off with the jobs report, or we rally this week, get a relief rally with the jobs report and start to turn a peak at some point next week. But I do think over the next 2 weeks here, I think you've got a good shot at completing this gap fill. Else is NVIDIA, as I talked about over the weekend, is going to move above the peak over here. NASDAQ already has moved above the August high. NVIDIA has not. And I think NVIDIA will push above the August high, and I think NASDAQ will fill that gap, and I think they'll both end up setting up lower highs. I think NVIDIA peaked back in June. On June 20th, I think NASDAQ peaked over here on July 10th. If I'm wrong about that, we go up and slam up into the upper boundary of the trend line and overthrow it again, slightly above this high. My guess is that's not going to be the case. I think we're forming a double top, as I've talked about, and I think that will be followed by a big sell-off going into the election. You've got a lot of uncertainty going on right now. You've got tensions in the Middle East, possible ground invasion into Lebanon. That could rattle markets, uncertainty surrounding a regional war. It doesn't. Geopolitical issues, sometimes they rattle markets, sometimes they don't. We just don't know. Something we should pay attention to. Now about to start the new quarter. We're going to be getting earnings. We'll be watching that. An election coming up. Oftentimes you see a sell-off going into election surrounding uncertainty. Very likely here. And if we get a big sell-off ahead of the election in October, possibly get a post-election rebound for the short term. But again, we could see a significant sell-off prior to the election. This potential push higher and then followed by a big sell-off. NASDAQ going into November. Keep saying, look, I believe that this is what's going to happen. Okay, I believe we're pulling back right now. I still think you're going to fill the gap. When you do, I think the S&P will likely peak. The Dow with it. Possibly the Dow is trying to peak right now. We're getting some interesting candlesticks on the Dow. Some things to pay attention to. Another thing to pay attention to, another catalyst, is this port workers strike. As of tomorrow, you're going to have the union for the port workers. They're going to start a strike. 45,000 port workers. It's likely going to go forward. Biden has the power to stop it for 80 days, delay it. He probably won't, not wanting to tick off the unions right before a general election. My guess is this is going to happen. Now, whether this impacts what kind of sell-off in the coming weeks ahead here, we'll see. Could cause concerns about inflation. It could cause more concerns about the economy. Something to be paying attention to. Not impact things immediately, but if it drags out, it could. This is set to begin here Monday night at midnight here throughout the East Coast here, so we'll be watching to see if this impacts anything. It's just something to pay attention to. Another thing to be watching. CNBC had a pretty good piece here, the tensions in the Middle East, and right now the markets are be one of the reasons for the volatility on Monday. May be later on in October if tensions to escalate, but they wrote a good piece here. Headline says it all. Iran's response to Israel will be a choice between revenge or survival. Markets say it's going to choose survival. So that's right now. That tensions may heat up further and things may escalate, and these things can sometimes really rattle markets. Other times they don't, but it's just something worth really paying attention to. A lot of uncertainty going into October with the election, with tensions in the Middle East, now with the port workers strike, going to be moving into earnings. Actually, earnings are not going to save the market, by the way. Eventually, earnings will start disappointing as we move closer and closer to recession and on into recession. Quickly bring up NVIDIA here. Again, very similar to S&P, again, pulling back. S&P's following NVIDIA. S&P, NASDAQ. NASDAQ has already moved above the August high. NVIDIA has not. I think NVIDIA is going to come back up here and move above it, complete an ABC move, and then I think it's going to tank. And I don't think it's going to move above the June 20th high. Again, I told you I believe that it peaked over here. Still think that. It could also form this double top where we have a peak over here, and then we come back over here and we have another peak. What I've been talking about for Bitcoin, what I've been talking about for the NASDAQ 100. Still think it's going to rally further. I think that's going to allow NASDAQ to reach that 20,400 area, probably overthrow it, but not move to a new high. And then I think NASDAQ will top. Here it is one more time. So again, it's already moved above the August high. I think it's going to come up in this area here, and then I think it's going to reverse. And I think that will happen here over the next 2 weeks. Week or next week, I think you're probably going to see a top in all likelihood. Now, historically, that's what has happened in the past. It happened in the last two bear markets in 2001 and 2007. 2001, we had already seen the market sharply decline, and it got a rebound. The Fed pivot, the Fed rate cuts. 2007, it topped with the rate cuts. I've talked about this at great length in detail. I think we have a very similar situation in 2007 where the S&P is going to make a new high, NASDAQ will not, and then I think they're both going to tank, and people do not expect that that's going to be the case. Right now, it's expected that the rate cuts are now going to give us this October, and just start soaring. The market is likely in a topping process, but I still, again, believe NASDAQ's going to go higher to fill this gap. As I keep saying, now again, we've had the rally back up, we've had the rate cuts. NASDAQ's still not moving to new high. I don't think it will. I think it already peaked, as I talked about back over here the day after it peaked. That I thought that was the top on July 10th. I told you it was going to come up to these trend lines that intersect and turn off of them. It slightly overthrew them. But I told you leading up into that July 10th high, I told you I thought that was going to be the peak right there. It ended up being the peak. And the very next day I told you I thought the top was in on July 11th. Still think that. But if we get a bigger rally, again, we could still come up here even towards this trend line, still get a lower high. If I'm wrong, we would slightly overthrow it and move just above this high. But again, my guess is you're going to get a lower high. Beautiful channel here going back to the pandemic low. I think we get the lower high, come back, break this trend line that we bounced off of, and eventually take out this horizontal support level, break the trend line, and move back towards this level here eventually. When we complete the top, again, I do believe going to usher in the bear market. I believe that we've already started the bear market on NASDAQ because I believe it's already topped. I think the S&P is still in a topping process. Same thing here. S&P, again, momentum up at extremes, not rolling over yet. It may form a divergence. It may be that we see it remain at extremes for an extended period of time. Might try to get above the upper Bollinger Band, but again, we're coming back up to the highs here. We're bouncing off our what? Our 10-period moving average. Momentum remains bullish. NASDAQ makes a move to fill that gap, and NVIDIA goes up above the August high. I think S&P will go higher. I think it will top out. I'm looking for a topping process, as I continue to say. Looking for a bottom here. Rounding the inflation data. For a rally to new highs, we're getting it now, and now I'm looking for the top, but I still think it's under construction. Bouncing off the 10-period moving average, we're just slightly below that high from a couple of sessions ago. Got a possible rising wedge with this boundary here. We may overthrow that level and redefine it. We easily overthrow this trend line. I'm just connecting these points. That's all I'm doing. Like I say, I continue to believe NASDAQ will hit the 20,400 area. When we do, I think S&P will be making new highs and probably peaking. An overall topping process. Again, I believe we have something similar to what we have going on over here, as I say, with the divergence on the RSI here in the daily time frame. And again, I think we're going to see a peak. I think we'll complete a larger divergence here. This looks very similar to what we had over here, very similar to the price action we had over here, as I've talked about at great length and detail. The thing you want to be watching is once we peak out, we come back, we drop below the 50-period moving average, and it starts coming down. Eventually, you're going to see a death cross at the 50 and the 200. Like after we peaked over here, we had a drop very quickly of about 15%, and eventually a death cross followed as we rebounded. But we could see something very similar to that here. Like I keep saying, I'm looking for higher highs in all likelihood, and I think that's going to happen for the next 2 weeks because I'm still looking for NASDAQ to fill that gap. And I think that when it does, I think S&P will be making a new high. But I do think this week, next week, you got a really good shot at completing a top. It could happen sooner rather than later, but my signals would all have to start turning back to bearish. That's just not the case right now. Momentum is still bullish. Signals remain bullish. Again, I've told you I think that the S&P is going to this upper channel line that I've talked about, but you've got these triple negative divergences forming all over the place in the weekly time frame. We have these beautiful divergences back up at the top, the bullish divergences at the bottom here in weekly time frame. So again, I still think you go higher, but then I think these divergences are going to play out, and we're going to have a Shocktober. People are going to get a big reality check. And right here as well, look at all these triple negative divergences that are forming on the S&P 500. Pretty interesting. Right here on the RSI, beautiful triple divergence forming. Look at that. Again, right here, I've excluded the shadows. We can even exclude the shadows. We may even overthrow the trend line a little bit. Again, my target level is between 5750 on the S&P to 6,000. I've talked about the long-term trend lines on the monthly chart. If you watch the videos, you know what I'm talking about. Those are the target levels, along with this trend line right here. The minimum objective target, which is the 5750 level we've hit right now. At the moment, we're at 5762. But again, I think these divergences are going to play out. I do think we go higher. Did you hear what I just said? Great Scott. I think we're going to go higher. And again, I'm basing that on the NASDAQ. I'm basing that on this trend line. But then I think we're going to top out. Look at the beautiful divergence that's developing on the MACD. I've talked about this. I think this thing's going to complete either this week or next week. I think you're going to go higher, get a bigger rally, and then I think you're going to reverse. The Dow is the wild card. The Dow may hit a top last week. It's still a question mark. The jury's still out, but I think the Dow is going to top as well. The Dow, as I've said, may top sooner. Talked about that in great length of detail. But let me be clear again. I think we see the NASDAQ go to the 20,400 area. I think we probably go up to this trend line. And maybe I'm wrong, and we don't exclude the shadow, and we include the shadow, and we get closer towards the upper end of my target range, closer to it, 58 in the 5,800s, the 59 or 6,000 level. Get a big rally. You can be sure that this divergence is going to play out. The institutions are driving it higher, allowing it to be driven higher by the retail investors. They can pull the car. They're stopping out. The rally we've had the last few weeks, again, short squeeze, then you suck in the bulls, and then you pull the rug out from underneath the bulls. That's what these people do. Harm the shorts. They harm the longs. That's how these people get their kicks. As I told you over the weekend, again, the diversions we had here, it may have just given us a pullback. Well, we got the pullback, and we hit the cloud today, and now at the end of the session, the final bar of the session, we tried to bounce. Divergences on the intraday charts, again, they could just give you nothing more than short-term pullbacks. What we had back over here and what we're having right now. So again, the divergence process could start all over again. But just watch the gap fill on NASDAQ, upper channel line on the weekly chart of the S&P. I think when we reach those levels, I think you got a good shot that a top will form. We're trying to firm up at the center line here. The divergences so far, again, have just given us sideways moves, short-term pullbacks. P is likely still going higher. Target levels I continue to talk about. With the sell-off today, and you can see it on the 60-minute chart, we got a bottoming tail. Then we had that late day surge, went positive, and we're now starting to see momentum turn back up on the 60-minute chart. So again, I think we'll see NASDAQ fill that gap at 20,400, and S&P, I think, will continue to make new highs. Once we fill that gap, I think S&P will begin to top out. We rally into the jobs report and sell off with that. Maybe we rally this week on in with the jobs report, top out at some point next week, but I think it's coming either this week or next week. Job to be paying attention to this stuff, looking for clues. I don't know the future, you don't know the future. We're looking at mathematically based indicators, looking at support and resistance levels, try to make educated decisions. Some hocus pocus, let me tell you the future nonsense. So again, I think we continue, the rally continues here. Now, same thing with NASDAQ 60-minute chart. We're coming down here. We're trying to turn back up now. Again, I think we're going to come take this high out. I think this is just a pullback. And then we're trying to bounce off the 50-period moving average and the cloud of support here on the 60-minute chart of the NASDAQ. So I think we're going to see it move to a new high, and S&P new highs, and we'll see what happens. Next 60-minute chart here. Closed out the month today. We ended up 114 points higher for the month on the S&P. We ended up about 2%. Again, we're going up and hitting the upper channel line in the monthly time frame that I've been talking about. We continue to have a winning streak. It's likely going to end very soon, and we'll see a top and a reversal begin in all likelihood because of the divergences in the weekly time frame and the monthly time frame. Target level is the 5750 area to 6,000 based on the trend lines in the monthly time frame. Quickly, the trend line here, again, one excluding the shadow from 2000, comes around 5750. We're overthrowing that level right now. The other one, if we include the shadow from 2000, this upper boundary, this long-term channel here in the monthly time frame, you're coming up into the 5900 to 6000 area. I think somewhere between 5750 and 6000, we're going to see a peak. Whether the upper end of the trend line or the lower end, well, that remains to be seen. But it's highly unlikely we're going to be clearing this trend line and just continuing to soar above it. It's not going to happen. More likely you're forming a divergence here, which you are on monthly signals with the previous peak in 2022, forming divergences with other peaks in the bull run here that I've talked about at great length and detail. Likely we're going to see a peak and a bear market that's going to take us back to this midpoint eventually, probably for 50 to 60+% drop. About the divergences on the monthly chart, and again, each one of them has led to a sharp decline or a bear market, and the lowest one was 17%. You have this now divergence with this previous peak in 2022. This is likely going to lead to a reversal that will eventually take out the 50-month moving average. I said week a moment ago, this is the monthly chart, that eventually take out the green line, the 50-month moving average, and the rising trend line, and again, fully come back and take out the pandemic low towards a midpoint of that channel in the long-term monthly trend line that I've been showing you.